If you're here today, that means you survived the worst market, the worst month on the stock markets in many, many, many years. And the big question is, now that we're in May, we're in the second day of May, is it going to get any better? Well, the next 48 hours are crucial to decide whether this market's going to get better, because in 48 hours, we have the biggest FOMC meeting that we've had in a long, long, long time. That's where the Fed is going to decide whether or not they're going to raise interest rates. I think we know they're going to raise interest rates, but more importantly, they're going to come out with guidance to tell us what their next step is. So I think the next 48 hours are crucial for aligning your portfolio. And we're going to talk about aligning your portfolio in the next 48 hours, because this last weekend wasn't really a good weekend for blockchains. You had Ethereum with the highest gas fees that we've ever had in our lives because of the Bored Ape Yacht Club metaverse land sales, the other side land sales. You had Solana, which was down for 7 hours, not processing transactions for 7 hours, believe it or not. And you had Fantom with a threat of liquidating more Fantom than there was on-chain liquidity. So it wasn't a really good week for altcoins, but that may have brought some opportunity. And today we're going to discuss whether or not you should be buying any of those altcoins. And we've got a big story for you about Luna. So it's a holiday here, but I'm here, bringing you crypto love and crypto wisdom. So let's do this. Let's do this. Let's get the fuck out of bed.
Get the fuck out of bed, bitch, go. Get up, and then they got go. Gotta wake up, bitch, get up. Get up, get up.
You know, I just want to say that if you're here, you're a fucking legend. You are an absolute legend, because you've been in a bear market of pretty much a 6-month down market, and you're still here, and you're still learning, and you're still liking this content, and you're here every single day. Give yourself a pat on the back, because you're an absolute legend, and your portfolio will thank you for it. But it won't thank you now. It will thank you in about 6 months when all of this is forgotten. Because I know when you're in the midst of this like negativity, it's hard to believe that things are going to change, and we're going to get to a point now where we get into a full-blown bull market. But let me tell you, that's exactly what happens. And I don't know if you guys watch George's shows, but he did a stream last night where all he did was he took a stream from like 6 months ago when the markets were in the same place. And there were points when I was thinking to myself, like, that's now. And so what the message is that the market always recovers. It usually recovers when you least expect it. It recovers way quicker than you think. And the main thing is that you got to be here when the market is down to align your portfolio, to learn, to become a subject matter expert. And then those are the ones that are going to reap the reward. So if you are here today, give yourself a pat on the back, because you're an absolute fucking legend. Anyway, let's do this. Let's do today's show. If you are a legend, smash the like button, show us that you're more of a legend. Let people know that we're here, because it is a holiday. I'm sure it could be a holiday where you are. It's a bank holiday in most countries in the world. It's Eid. To all the Muslim family, the Muslim Banter family, wish you guys an Eid Mubarak, wish you guys a meaningful Eid. To everybody else, it's May Day. It's a bank holiday. It's the beginning of May. It's May Day. So if you are here, thanks for being here. I'm here because there are 48 hours to go until the Fed meeting. And since there are 48 hours to go until the Fed meeting, I thought I better come here and I better make sure that we're all aligned in terms of what could happen to the markets after the Fed meeting. Because right now, where we're at is that if you look at April was a terrible month for the markets. And not only for crypto, it was a terrible month for stock markets. You had the NASDAQ down 13.26%. It was officially the worst month for the NASDAQ since October 2008. So you're talking for 14 years. For 14 years, we haven't had such a bad month on the NASDAQ. And remember, Bitcoin is now tracking the NASDAQ one for one. So every time the NASDAQ goes up, Bitcoin goes up, and every time Bitcoin the NASDAQ goes down, Bitcoin goes down. And you saw that yesterday when the futures opened. Yesterday, Bitcoin was trading at 38,000 the whole day. I'm sure you guys saw that. And when the futures opened slightly green, then all of a sudden Bitcoin jumped to 39,000. So now we're in the hands of the NASDAQ. And the NASDAQ had its worst month in April, historically a very, very, very bad month. Not only that, but Friday was the worst trading day in the SPY's history, in the S&P 500 since 1993. And after all of that FUD, we're still here. We're still here, and we're still absorbing content, and we're still excited about where we're at. So that says a lot for the people that were here. Goldman Sachs also saying that out of the last 687 weekly readings, there have only been 14 instances where the sentiment was this bad. Like, just understand the market where you are, and then take a check again on your portfolio and ask yourself, this is probably as bad as it's going to get. I mean, I can't imagine that the US stock market's going to go down 20% in April and then 20% again in May. It just doesn't make sense. Usually, when you have such a down month before, you at least get some stability, if not an up month. So give yourself a pat on the back if you're still here and you're still kicking and you're still investing and you're still positive. Then that says a lot when you take it on the context of how much negativity there is in the market out there. So, I mean, and I guess that's what separates good investors from bad investors. Bad investors come here and they want to catch the hype. Good investors are here all the time and actually positioning their portfolios. And again, I'm not too worried because I think we're still keeping on that trend line. And I must be honest, I was super surprised that after all the carnage of last week, Bitcoin held up pretty well. I mean, Bitcoin didn't break that 38,000. I mean, it broke it momentarily. But it didn't break. It could have gone a lot worse. And I want to show you when I say a lot worse. I mean, you look at Bitcoin relative to the NASDAQ. So the NASDAQ is down 22% year to date. And Bitcoin is only down 17% year to date. So Bitcoin is doing pretty well if you think about the fact that it is tracking the NASDAQ. But to me, Bitcoin feels like it is a riskier asset than the NASDAQ. And it is doing better than the NASDAQ. I wanted to show you this because this is something that maybe gives you a little bit better perspective. Because the problem is that when you look at the NASDAQ, let's quickly zoom out on the NASDAQ. This is important. So if you look at the NASDAQ and you zoom out, so let's zoom out to, here we go. So let's go back to pre-COVID levels on the NASDAQ. Okay, let's just see if we can go back here. Okay. Let's go back even further. There we go. So that's the NASDAQ chart, and we're talking pre-NASDAQ. So you see this is here, pre-NASDAQ, and let's just see where we are relative to that. So relative to that, we are 31% higher than the pre-COVID, than we were pre-COVID. We did get to a point where we're 72% above the pre-COVID highs. Now we're 31% above the pre-COVID highs. But that's not a reasonable measure. And I'll show you why. If you take ARK Invest, now remember ARK Invest is Cathy Wood's ETF, which is, it's an innovation ETF. And if you think about the stuff that's in here, it's things like Tesla, Zoom, Coinbase, Square, Roku, Teladoc, Twilio. It is Cathy Wood's ARK. It is what they believe. And if you look at this fund relative to where it was pre-COVID, it is actually way under the COVID levels. It is right now about 25% under where it was before COVID happened. So when you compare that, if you compare that to where the NASDAQ is, on the NASDAQ, this looks like pretty much an ordinary correction. But if you look at the growth stocks, which arguably you could say this is what Bitcoin should be compared to. Bitcoin, this is, if the market's comparing Bitcoin to a growth stock, this is what Bitcoin should be compared to. And these growth stocks are actually down 25%, where at the same time, you've got Bitcoin. Let's look at the Bitcoin chart relative to the same time period. Let's just get it over here. Here we go. Okay, so You look at Bitcoin relative to that. Before COVID, Bitcoin was trading at 10,522. Now, after COVID, Bitcoin is trading at four times that. So remember, keep blocking out the noise when you see that, because if Cathy Wood can remain positive, and listen to what she said.
Explain to the viewers and to your loyal fan base, why should they continue to stick with you when you're down 45% on the year?
Well, I think if we put in perspective what has happened here, you'll understand some of the loyalty. First of all, we give our research away, and I think we get it back in terms of, people believe averaging down into a strategy of ours, believing that we're onto something, some very big exponential growth opportunities. But if you look at the last 5 years, and we do.
So she's still coming out and saying, look, for us, we still think that there's exponential opportunities. And by the way, I mean, I must be honest, when I saw this, I actually think it might be worth taking a small chunk in your long-term portfolio. Let me just kill that. It may be worth taking a chunk in your long-term portfolio of Cathy Wood's ARK Invest. If you are buying stocks and you are looking for stock ETFs, then it may be worth looking at this, because I think that this basket of particular growth stocks has been hit really, really, really hard. Anyway, despite that, if you look at the Bitcoin return relative to all the other returns, so it starts off when all the returns are the same pre-COVID, and then look at what happens. So look at what happens. Bitcoin shoots up, becomes the best performing asset since pre-COVID, and everything else remains under that since pre-COVID. But that's not enough to convince a 91-year-old and a 98-year-old man. And Warren Buffett and Charlie Munger are, they are arguably some of the best investors of all time. I mean, what they've managed to do, even Chamath on the All In podcast said, is it's huge. Like what Warren Buffett and Charlie Munger have managed to do over long periods of time, no one else has managed to do. In fact, even Chamath said that they are amongst the best investors in the world. But
now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago.
Satoshi, bro, Satoshi.
He could create a mystery about it, but everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well,
he's 91.
Some Bitcoin from you.
He's 91. He doesn't get it. And the worst thing is that his partner, Charlie Munger, has actually got like much worse views.
In my life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else. And Bitcoin does all three. And the first place, it's stupid because it's very likely to go to zero. The second place is evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity and government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. And with all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
Okay, so that is what Charlie Munger said. And remember, he's now 98 years old, and he's now applauding China for being able to ban Bitcoin. But you got to think about it from their point of view. They made their billions because they understood the Fed system, because they could ride the old financial system. But in the new financial system, well, they just don't get it. And that's why they missed many tech plays like Amazon and Apple. And they missed a lot of those tech plays because I think that they simply don't understand tech. So not taking away from anything that they've done, because I think what they've done has been fantastic. But I just think that they're not the most astute investors right now when it comes to tech, when it comes to network effects and stuff like that. Although one thing that I did note is that they haven't deployed money for a long time, but Q1, they deployed 34% of their cash reserves. They bought $51 billion worth of stocks in Q1, and that is after net selling before Q1. So it does show that, I don't call it smart money, but big money, and I mean, you got to call it smart money, is actually buying the dip. And they're starting to deploy money back in the NASDAQ and in stock markets and in a whole lot of other things. So I don't know, guess, there's good and the bad. The main thing is, don't listen to the noise. Read what's happening under the noise right now. Because remember, in a bear market, the noise always goes to the bearish side. In a bull market, the noise always goes towards the bullish side and the market reacts. And so while the market is reacting to bad news, you got to look right through the news and you got to look at things like what's happening. Now, this is something that caught my eye, and it's amazing because in the previous bull markets, you had retail adoption. That was like the first bull market. Then you had funds adopting. You had like investment funds adopting. Then I suppose the last bull market, you could say, was institutional adoption, right? That was what happened. But now what you're getting is country adoption. So even though it's small countries and small cities, but you're getting city and country adoption. That's the headlines now. Central African Republic, Panama legislature regulating crypto, Cuba approves crypto services, Buenos Aires to allow people to pay, Bahamas to allow citizens to pay taxes. And if you keep reading what's going on here, now it's about states and it's about countries. It's not about institutions or about retail anymore. So that, if you're reading the right news and you can block out the noise, that's what you're reading. If you're reading the right news, what you can see is that 64.81% of Bitcoin have not moved in over a year. This is the longest time that we've had long-term holders holding their Bitcoin. So if you just look at the fundamentals and you block out the noise and you block out the market sentiment, which is nothing we can do about, because our market sentiment right now, unfortunately, is being governed because we have institutions in crypto. We asked for institutions, we got institutions. Getting institutions in crypto means that they are now the majority of the money. When you've got institutions in, they bring the money with them, but they also become the majority of the money. And the problem is, for them, it's either risk on or risk off. There's no, let's keep risk on NASDAQ and risk off Bitcoin or whatever else. No, they're either risk on or risk off. And you can see that because they take risk off anything growth. They put Bitcoin into this growth stock basket. And then every time that the NASDAQ goes down, so does Bitcoin. Every time that NASDAQ goes up, so does Bitcoin. Because they deploy money, risk on, risk off, risk on, risk off. And right now, they are very much in a risk-off environment. In fact, I saw this. I think here it says, everything is now risk-off, which is weird because traditionally, people used to go risk-off stocks, and then they used to take their money and put their money into bonds or put their money into real estate. Now what you're getting is you've got risk-off stocks, risk-off bonds, risk-off real estate. People are risk-off. That's it. They are risk-off. And they're going to remain risk-off because they're worried about the Fed. They're worried about how aggressive the Fed is going to be. And that's why we said that there's 48 hours to go, because in 48 hours or so, in fact, it's just over 48 hours, the Fed is going to meet, and they're going to come out with the interest rate decision. And I think the interest rate decision is pretty much, everybody knows that on the 4th of May, at the meeting on the 4th of May, they're going to increase the interest rates by 50 basis points, 0.5. But then in June, people are starting to price in a 0.75% hike in interest rates. So 100% of a 50 basis point rate hike in May 4th, 100% of a 75 basis point rate hike in June, which is the next meeting. That's what the market's starting to price in. Now, why is this bullish? Because it is bullish. Let me assure you that I think it's bullish. Because the market is scared. Because the market is now pricing in the worst case scenario. The market is pricing in 50 basis points in May and 75 basis points in June. And remember that the US hasn't raised interest rates by 0.5 for the last 20 years, since 2000 or 2002. And there's never been a back-to-back 50 basis point rate hike. There's never been a 50 basis point and then another 50 basis point. There just hasn't been that. So I think if the Fed does that, it becomes an unprecedented move. And it becomes an unprecedented move in an environment where you've got high inflation, but people have also run out of savings and people aren't buying shit. Now, I want to play you something that Chamath said, because I think it's 2 minutes of our time, which are very, very, very well spent, worth listening to.
Manufacturing equipment is being delivered now. We had negative GDP in Q1 for a whole host of reasons that can effectively be summarized by the fact that we are still trying to restart an economy at the tail end of a pandemic, and we're doing it in fits and starts. And so we have these small bursts of incredible GDP, which we had last year, and then contractions in the economy.
Right.
The thing that's always been true about the United States is that we are a consumer-driven economic engine, which means that as long as people feel confident and they're buying things, the economy tends to do well, and we tend to move forward as a society. When consumer confidence ebbs and people contract their spending, we are in a world of hurt. The last couple of years, we've had a lot of consumer savings, right? We've had a lot of money that's been pent up in the system, whether it's stimulus checks or loan forgiveness, or all of this stuff has allowed people to feel much richer. And as a result, they've started to spend in dribs and drabs. The problem now is that because prices are so high, all of those savings have largely been depleted. I just sent you guys
people are running out of money
in the group chat
and prices
of
are going
what
up.
Consumer spending looks like, and consumer savings rather. And it tells a really, really scary story, which is that the savings boom is largely over. Personal savings rate fell to 6.2% in March, the lowest since 2013. And so what does that mean? Well, it means that the setup is there for us to sort of really contract what we are able to spend as a society. So I think now the odds even push further in this direction, that we could have more quarters of negative GDP. And all of a sudden, we're back to what we talked about before, which is a 2019-like scenario, where the government, or the Fed specifically, races forward to tackle inflation. And in 2018 and 19, it turned out to be a head fake. And by the way, in 2019, the stock market ended up more than 30%, up 32% or something like that. Crazy numbers. Here, and by the way, back then in 2019, China turned over. It looked like it was going to be a fast-moving economic recovery for China, and instead they...
So that's what he's saying. He's saying, look, the US is driven by consumer spending. Consumers have run out of savings. At the same time, prices are going up. And we had the first quarter of negative GDP growth, negative 1.4% GDP growth in the United States last month. That is the meeting that the Fed is going into. So here's what I think is going to happen. And I may be completely wrong, but I'm taking a view. And I know many people are scared of taking a view. I'm taking a view. What happens with the interest rate decision on Wednesday means nothing. It's inconsequential. It's a 0.5% interest rate hike. But I think the guidance that Jerome Powell gives afterwards is going to be dovish. I don't think he's going to be hawkish, because already we've had a 20% pullback in the markets, and the US is going into recession. The US is 1 quarter away from negative growth, going into recession. And so I have a suspicion that in 48 hours, we're going to see a pump. TED Talks Macro, he said something. He said something here. He said, the event has the potential to change the course of risk market from bear to bull, or to capitulate if the event risk in the outcome. So that's what this meeting is about. I think I'm a glass half full kind of guy. And I think that they're going to become more accommodative in their tone. And if they do become more accommodative in their tone, then I think we could get some kind of relief rally. Even though it might be a short-lived relief rally for the month of May, I do think that we're going to get a relief rally. I don't think that he's going to continue to put the markets into decline, knowing that prices are increasing and knowing that the average consumer in the United States is actually being hurt now. And so I think all eyes on the Fed. The good news is that we're going to be here live when the Fed does the guidance, and we're going to walk you through it. So we're going to play it, and we're going to sit down. We're going to walk you guys through it. It's going to happen. I think it is 2:30 EST. It's 2:30 EST on Wednesday. 2:30 EST on Wednesday. So that's what we're going to be at. We're going to be here with you guys. We're going to be going through it with you guys. So make sure that you guys are tuned in. All right, let's talk altcoins, because you guys don't care about the macro. You guys are absolute degens, and all you care about is your altcoin portfolio. And this weekend felt like a little bit of a capitulation in altcoins. I mean, the altcoin bags got hammered. But I didn't see panic. I didn't see panic. And I told you guys that I've got a watch list. So I've got a watch list. This is not a watch list for you. It's a watch list for me. And the reason why it's a watch list for me is because these are things that I need in my portfolio that I don't have enough of. It doesn't mean that this is a good watch list for you guys because your portfolio may not have enough Solana or Fantom or everything. But this is what I'm looking at. And to be honest, I didn't deploy anything. In fact, no, I did. I bought a little bit of Bastion protocol because I just think that this one may be cheap because the private sale investors who were locked up paid like 1.5 cents or something like that. So for me, I haven't deployed anything yet. Oh, and I did deploy a little bit on Rari because they had a hack. And for me, I always know that when hacks come, that's the time when you want to be deploying. And so I deployed a little bit of Rari. I paid more than this. I paid about 11.40 for Rari. But I'm holding it in the long term. I'm holding it for the long term. I'm not doing a short-term hold here. So yeah, that's it. Let's talk about APECoin because I made a video for you guys on Friday. It was a dedicated video to this APECoin opportunity. And this is what I said about what's going to happen to the coin after the mint. So let's just listen to what I said. Want to do it. So in closing off, I would say it's a good one to buy. Buy it on the pullbacks. Don't chase the pumps. I think we'll see a pullback. I'm not sure that this. So I said I think we're going to see a pullback straight after the mint. I think we'll see a pullback straight after the mint, because remember, that's the way to buy the land was you had to have a KYC wallet, you had to own an ape or a mutant ape, and you had to have a KYC wallet, and then you bought the land at 305 ape. Now let's call that $6,000. So you had to have $6,000 in your wallet, and you have to have two of those. So people were buying ape because they wanted to buy the land, and then they wanted to buy more ape because they wanted to buy more land on the secondary market, and you could buy it using APECoin. So we got the first part. We got the pullback from 27 to 1544, and I think this price is going to continue to go down even more. I think the price is going to continue to go down even more, because I think that this land sale was an absolute fucking disaster. Okay, disaster of epic proportions, and I'll tell you why it was a disaster. I think it was a cascade of disasters, a cascade of disasters, and I'll tell you why. I'm a big fan of Bored Apes, Mutant Apes, Yuga Labs. Why? Because I think that their vision for NFTs, and I think what they're doing in terms of buying other franchises and joining forces with Adidas and whatever else, genius. Okay, but this mint was a disaster. Let's walk through it. Let's see what happened. The first thing is that the average ETH user paid $4,830 per transaction in gas fees for failed transactions, too. So not only did you pay $4,830 if you were buying the land, but you paid $4,830 if your transaction failed. And so many transactions failed. It was a joke. I was watching it. It was an absolute joke. A handful of users paid $7,400 to get their transactions through. Now remember, some of these people were buying two pieces of land. That's $14,800 in gas fees. One guy paid $43,000 to put through a transaction. $43,000 to put through a transaction. Okay, now the land is trading at a floor price of 4.29 ETH. So your cost of the land was $6,000. Call that 2 ETH, 2 point something ETH, 2.2 ETH. But then you definitely paid at least 1 ETH for gas fees. So you definitely paid 3 ETH. So these guys are now selling the land at 4.29 ETH, unless you've got a coda, which is like a special trait. And then I think that the floor price is 20 ETH or something like that. So that's where it is now. Okay, this is where it gets depressing and sad, and I'm actually angered by this. So what am I angered by? I'm angered by this. I'm angered by the fact that $175 million was paid in gas fees for one NFT launch. That is $175 million. Do you know how hard it is to raise $175 million for your project? Do you know how hard it is for even the best projects to make $175 million. $175 million was paid in fees for one project. This is what the miners, this is what the miners, how much the miners made in gas fees. Look here. Look at that chart. You can't even see the blue line at the bottom. And then the blue line spikes all the way up to here in gas fees. That is what happened with the gas fees. Okay, so let's just talk about what happened. So Yuga Labs apologizes. The founders apologize. So Garga, he's one of the founders. He apologizes. Needless to say, tonight didn't go how I wanted it to go. I'm so sorry to the apes, to everyone. Oh my goodness, good. Cry me a river, cry me a river. Yuga Labs comes out and says, we wanted to say a few words about the mint tonight. We know it was unprecedented. It was so successful that it crashed the whole ETH network. And then it says, we are aware that some users had failed transactions. We will refund you for those transactions. We will refund you for those transactions. But then it says, we're sorry for turning off the lights on Ethereum for a while. It seems abundantly clear that APECoin will need to migrate to its own chain in order to properly scale. We would like to encourage the DAO to start thinking in this direction. So this whole thing could have been orchestrated to create huge gas fees so that you could justify to the DAO, which is a decentralized organization, that we should actually move this whole ecosystem onto a side chain, onto our own chain. Now, I think that would be a terrible mistake. I think it would be a terrible mistake. I think the reason why people like the Bored Apes and the Mutant Apes is because they are on Ethereum. And if you look at similar collections on Solana, and I got your collection on Solana here, it's the OK Bears. The floor price of the OK Bears is like, it's nothing. It's like $6,000 or something. It's garbage compared to a big collection on Ethereum. And so I think that if they go and start moving to another chain, and they start moving the APECoin and the Bored Ape Yacht Club and the Mutant Apes onto a side chain of Ethereum, it's going to devalue the project by huge multiples. And I'm not the only one who thinks that. A lot of people lost trust for the apes. I picked this up, just finished exiting all my ape-related NFTs. Now that Yuga Lab has revealed their true colors, I can't unsee it. They're con artists. It took me long to learn this lesson, but it's 1,000% worth it, blah, blah, blah. It says, here, instead of designing their launch properly, Yuga Lab broke Ethereum so that they could use that as an excuse to launch their own layer one. Ape needed a new narrative after the land sale. And so he says that they are con artists. So that's what I think is going on. And I'll tell you why I think that's also going on. Because we said over $100 million was spent on gas, but they did not optimize the contract. I mean, here's a guy on Twitter who basically gives them a whole lot of fixes as to how they could optimize the contract for gas fees. Their contracts were so badly optimized for gas fees that it's almost like they should have been smarter. Such smart people should have been smarter, should have optimized for gas fees. Also, you know how bad mints are. And since you KYC'd the wallets anyway, why not KYC, or say what the first third of wallets you can mint for 2 hours, and the second third of wallets you can mint for 2 hours, and then the third of wallets you can mint for 2 hours. Why get everyone to go at the same time if anyway the number of wallets that can participate is limited because you had to KYC and whitelist them before that? They knew better. They should have known better. They should have known better. Anyway, that's apes. That's my rant on apes. I do like apes. I do like apes. I just think that if I move on to another chain, dead meat. Right now, I'm not buying APECoin, to be honest. If it goes anywhere near $10 or under $10, I may start buying APECoin. But if there's a risk that they're going to migrate to their own chain, I'm out. I'm not touching this coin. I'm out. All right, let's talk about Fantom, because that's another one that got hit hard. Let me quickly call up a Fantom price first. Not good, but I'm going to show you that I think Fantom actually might be, for me, the biggest buying opportunity that we've seen in a long time. And I'm going to show you why. You can make your own decision as to whether you should be buying it or not, but I think it's the biggest buying opportunity in a long time. So Fantom starts going down over here when Andre starts leaving. So Fantom gets hit, goes down. Then Fantom goes down over here, these big red candles, because of a liquidation that is happening to one of the big Fantom whales. Okay, now, so you got this guy, his name is Roosh Rabbit, whatever you want to call him. Okay, so he's crazy. We're in crypto and we're calling people rabbit roosh. Okay, so what he did was he took a whole lot of loans, collateralized loans against his Fantom, okay? This all started in the beginning. This all started when there were solidly wars. Remember when there were solidly wars and you had to lock up your Fantom to earn a whole lot of different tokens so that you could get solidly when solidly was about to get launched. So what did this guy do? He locked up a whole lot of his Fantom. He locked up a whole lot of his Fantom. $50 million worth of his Fantom, $57 million worth of his Fantom. What did he do then? So he has this Fantom locked up. He borrowed USDC stablecoins again, or US dollar stablecoins against it. Then what happens is the price of the Fantom goes down, 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 down. And all of a sudden, he now has to start getting liquidated. So he starts getting liquidated. He has to liquidate $55 million worth of Fantom or something like that. Okay, and that is what drove the Fantom price down. He had $59 million of Fantom as collateral on Scream. Okay, we know that. Price goes down. So the first part of the chain liquidations happen. 11 million Fantom sold. 48 million Fantom still unsold. Then we had the second part, which put the price down to 76 cents. And now he has, at the time of writing this, he had like 26 million, 18 million Fantom. And I don't know if he's finished being liquidated, but he's damn close to being finished being liquidated. Nothing is wrong with the technology. Nothing is wrong with the Fantom technology. Fantom technology is amazing. I'm not the only one that says this. I'm not the only one that says this. Andre Cronje broke his silence this weekend. And to me, I listened to the whole podcast. It was a Delphi podcast. To me, it sounds like Andre may be coming back. He sounds like he's absolutely bored doing what he's doing. He sounds like he's missing DeFi. And he sounds like he still loves the technology. And specifically, listen to what he said about Fantom.
It's definitely a moving or a work in progress. So Andre, just to switch gears.
Oh, I was listening to it in 2 speeds. So
there was articles out there, they were retracted, some were true. So I want to dive into that a bit because people kill me fast. But just to set the stage here, why exactly did you decide to build on?
It's on 1.5 speed. So
what was the main draw?
Okay, so now this I find fascinating, right? Because if you go check at the GitHub commit history of Go Opera and Go Lachesis, which is the 2 primary nodes running Fantom, and you go check who was the first primary contributor who built the original network, you're going to see my name. If you go to the original papers that were published by the foundation that describe the consensus mechanism, how it works, how it
Andre built it. I was there.
Pruning all of those things, you're going to find my name. I am one of the original builders of Fantom. I am one of the original authors of the theoretical papers. So it wasn't really me making a choice to build on Fantom. I built Fantom and I really wanted to continue building on it. And I think that is lost.
That's kind of it's kind of weird that I didn't even know that. I think it's lost a lot of people.
But again, this was before Yearn days. So and that's actually something I wanted to say originally. But like before Yearn, I was with Fantom. Before Fantom, I was with Crypto Briefing. I used to do the technology code reviews. I don't know if you remember those back in the ICO days when I'd go into these guys' GitHubs.
You call that a lot of projects.
Yes. So like that's my background originally, not the Yearn stuff. The Yearn and all of the DeFi stuff that was hobbyist behavior. Yearn Keeper and Solidly. Fantom wasn't a after the fact choice. I've always been there, and that's not.
Listen to what he says about the tech now.
That's actually pretty interesting. I didn't know that. Why do you think people don't actually know this in mass? Or maybe
listen to this. Listen to
like
this.
They don't.
Who looks at research papers? Who looks at old GitHub commits? Like you look at the most prominent vocal people. The thing is, when Fantom really started to get its day in the light, I wasn't a core dev anymore. I wasn't a core researcher. I wasn't involved in the executive team anymore. Like Kong and Quan and Igor and those guys have all taken over, and they're doing a much better job than I can. And its current success is to them, but its origination is to me. So that's why I always find it weird when people are like, oh yeah, but why did you choose Fantom when you could have gone to Avalanche? I also really respect Avalanche's technology. I've said so publicly. I've complimented Snowball since
I'll slow it down.
And I remember what was the team that did the first implementation. I think it was Perlin, and I loved their code. It was absolutely beautiful. So I've been a long proponent that they're one of the only other real technology plays out there other than Fantom. Because the other thing that also gets me, right, and I also think this is partly my fault, but a lot of people don't actually know that Fantom's consensus is, one of the only 2 ABFT consensus systems out there. It's only Fantom and Avalanche, and it doesn't have a longest chain rule. There's no rollbacks or stuff. Once a transaction has been seen by the majority of the network, that's final. There's nothing that can happen.
Quick finality.
It's also one of the only chains that doesn't need its history to prove its current set. It can actually do data pruning after every 3 leaves of snapshots. So it doesn't bloat infinitely. It has beautiful time to finality. It can get to finality in under 900 seconds for a transaction when it's seen by the network. And it's technologically speaking such an amazing technology stack, and yet the common belief system by most people is that it's like a GEF fork or something. Like the only GEF that is in there is some libraries that are imported for opcode compatibility for the EVM that runs on.
So that's what he said. He also said that he hasn't been active on the Fantom ecosystem in the Fantom chain for a long time, and he continues to consult the Fantom team as he has been for the last 2.5 years. So I don't know. I think right now Fantom must be one of the biggest opportunities out there. I just have enough Fantoms. I'm not buying it because I have enough. I can't buy more into my portfolio, but I do think that right now it's one of the best opportunities out there. You do what you want to do. You know what my view is. The network's working as intended. Nothing's wrong with the network. All right, let's do some quick Luna news. So Anchor Protocol has now reduced to their semi-dynamic rate, which is now at a whopping 18%. So 17.99%. Let's go to the earn page. 17.99%. So they went from 19.5 to 17.99%. And guess what? Not a single dollar has left the system. 13,833 because there's nowhere else to go. So Anchor's still good. Remember, we're watching this yield reserve. And Do Kwon has said that the yield reserve, he may top it up by $1 billion, he said, if this happens. So that's that. The other bit of alt news is Solana. So Solana was basically out for 7 hours this weekend because they got attacked by a spam attack, by too many spam transactions. And they basically had to reboot the entire Solana system. A lot of people are mocking Solana for this, but the price didn't even move one bit, which means that the market's kind of forgiving Solana for that. I did love this meme. Solana devs trying to protect their network. Yeah, but again, you got to remember Solana is not even in its real mainnet. It's in I think it's called a alpha mainnet or something. It's not even in its like real mainnet. So yeah. All right, let's see what else is there. We've got 1 or 2 more minutes. What else is there? I did like this article over here, which said that Peter Thiel, Jack Dorsey, and others who disliked Twitter's direction pushed Elon Musk to launch a bid, and that was as per Tech Meme. It makes sense. I think Jack was very fed up with what's going on at Twitter and hated what Twitter had become because Jack's a big liberalist. And I think they started to push Elon Musk to buy it before Elon Musk bought it. And there are rumors that Elon has already lined up Parag's replacement. So I think, as I suspected, Parag's gone. Parag's gone. And look, I'm not going to comment. Lastly, VanEck, which is a massive Wall Street company that makes ETFs, is now launching an NFT collection to give early access to research and event invites. So again, more adoption happening right under our eyes all the time. Yeah. All right, that's it for today. Anybody has any questions? I'm here for the next 3 minutes. Put them in the chat. Let's see where we go. Otherwise, I think let's just quickly look at the market. Let's just look at the market quickly. Just quickly see where we're at. Bitcoin is at 38,820. You have the NASDAQ up 29 points. Basically nothing happening. Nothing's going to happen until Wednesday. And on Wednesday, the markets are going to get nervous. And I think it's going to get wow. All right, let's go. Let's look at some questions while we're here. Let's do some Q&A. Okay, so you've got Bamboo Village is the world's first NFT. Oh, goodness. No, please don't shill in the super chats. I had Luna News. Yeah, I gave you guys the Luna News. Luna News is that the Anchor Protocol yield has gone down to 18%. So that's the Anchor Protocol news. Also, remember that last week, Luna teased that there was something big happening. I wonder if what they teased was the Fireblocks thing, where institutions could now use Fireblocks to deploy Luna DeFi. And that they said that the $500 million was deployed almost immediately. So I wonder if that was the Luna News. There was Luna News last week. Oh, what else? Render 166, crazy. Yeah, I agree. I'd be buying it. There was a lot of Render news. If you go to their Twitter this week, big news. Big news. Sheldino up. Sheldino's taking some time off. I've been playing paddle with him. He kicked my ass, but don't worry, I'll get him back. I will get him back. CRO, I don't follow CRO, to be honest. It's not one of the tokens that I follow. I mean, I know it pretty well, but yeah. Oh, okay, STG. So STG is part of my watch list. I nearly bought some at 90 cents. Didn't pull the trigger yet. Didn't pull the trigger at 90 cents. I think I'm waiting a little bit more, but I must say this is a reasonable level to be buying into these things. This is a reasonable level. I didn't buy yet, but I think this is a good time to start building, to start aping in. S Fund is all about it's all about gaming and NFTs. And right now the gaming and NFT market's a bit screwed, and so a launch pad isn't going to do well. But rest assured, when there is a bull market, then it is going to do well. So you got to just be around and maybe accumulate now. If you think there's going to be a bull market soon in gaming, then buy in. Jule's been hit hard. There has been a lack of trust in the protocol from the community. To me, overvalued. I'm out. All right, let's do one more. Arweave. Just keep accumulating. The best thing that you can do with Arweave is just keep accumulating. Alrighty, guys, it is a holiday here, so I'm gonna go back and spend some time with the fam. See you guys again tomorrow, same time, same place. Tomorrow I'll do some Bybit giveaways. Remember, if you don't have a Bybit account, you've got 24 hours. Get yourself a Bybit account. Deposit money. Just deposit money. Don't trade. Don't do anything. Just deposit money, and we will do double some portfolios, and we'll 10x a portfolio tomorrow. So I'll see you guys again tomorrow. Until then, trade well, my friends. Have fun. Obviously, don't buy XRP. This thing's garbage, man. Where's it going? To the moon. XRP is not going to the moon. Unless someone puts it on